Meaning and structure of financial market. Financial markets play a crucial role in the economy, as they facilitate the exchange of capital, goods, and services between individuals, businesses, and governments. These markets provide a platform for the buying and selling of various financial instruments, such as stocks, bonds, and derivatives. The meaning of financial markets can be understood as the system that enables the flow of money, credit, and investments from those who have surplus funds to those who need them. This exchange of capital is essential for the growth and development of businesses, as it allows them to raise funds for expansion, innovation, and other strategic initiatives. By Dr. Praveen Rajguru. 2. Why should one invest? 1. Earn return. Investing allows you to earn a return on your idle resources, generating a specific sum of money for a specific goal in life. 2. Provision for the future. Investing helps make a provision for an uncertain future, ensuring financial security and peace of mind. 3. Combat inflation. One of the most important reasons to invest wisely is to meet the cost of inflation. Inflation causes money to lose value over time, making it crucial to invest to maintain purchasing power. 4. Real rate of return. It's essential to consider an investment's real rate of return, which is the return after inflation. The aim of investments should be to provide a return above the inflation rate to ensure that the investment does not decrease. In I3. When to start investing? The sooner one starts investing, the better. By investing early, you allow your investments more time to grow, whereby the concept of compounding increases your income by accumulating the principal and the interest or dividend and earn. 4. What care should one take while investing? 1. Obtain written documents. Obtain written documents explaining the investment, read and understand them, and verify the legitimacy of the investment. 2. Assess risk and return. Find out the costs and benefits associated with the investment, assess the risk-return profile, and know the liquidity and safety aspects of the investment. 3. Compare and evaluate. Ascertain if the investment is appropriate for your specific goals, compare it with other investment opportunities available, and examine if it fits in with other investments you are considering or have already made. 4. Authorized intermediary. Deal only through an authorized intermediary. Seek all clarifications about the intermediary and the investment, and explore the options available to you if something were to go wrong. 5. What is meant by interest? Interest is an amount charged to the borrower for the privilege of using the lender's money. Interest is usually calculated as a percentage of the principal balance, the amount of money borrowed. The percentage rate may be fixed for the life of the loan, or it may be variable, depending on the terms of the loan. 6. What factors determine interest rates? Demand for money. The demand for money is a key factor influencing interest rates. When demand is high, interest rates tend to rise as lenders can charge more for their funds. Government borrowings. The level of government borrowings also impacts interest rates. When the government borrows heavily, it can increase demand for funds, pushing interest rates up. Supply of money. The supply of money in the economy is another crucial factor. When the supply of money is abundant, interest rates tend to fall as lenders have more funds to lend. 7. What are various options available for investment? Physical assets. Physical assets like real estate, gold, jewelry, and commodities offer tangible investments with potential for appreciation. Financial assets. Financial assets such as fixed deposits with banks, small saving instruments with post offices, insurance, provident, pension funds, and securities market-related instruments like shares, bonds, and debentures provide diverse investment options. 8. What are various long-term financial options available for investment? 1. Post office savings schemes. Post office savings schemes, such as the monthly income scheme, offer low-risk savings options with guaranteed returns. 2. Public Provident Fund. The Public Provident Fund, PPF, is a long-term savings instrument with tax benefits and a maturity of 15 years. 3. Company Fixed Deposits. Company fixed deposits are short-term to medium-term borrowings by companies at a fixed rate of interest, offering potential for higher returns. 4. Bonds and debentures. Bonds and debentures are fixed income instruments issued by governments, corporations, and institutions, providing a steady stream of income. 5. Mutual funds. Mutual funds pool money from investors and invest in a diversified portfolio of assets, offering professional money management and diversification benefits. What is meant by a stock exchange? The Securities Contract Regulation Act, 1956 defines stock exchange as any body of individuals, whether incorporated or not, constituted for the purpose of assisting, regulating or controlling the business of buying, selling or dealing in securities. Stock exchange could be a regional stock exchange whose area of operation, jurisdiction is specified at the time of its recognition, or national exchanges, which are permitted to have nationwide trading since inception. NSE was incorporated as a national stock exchange. What is the function of securities market? Securities markets is a place where buyers and sellers of securities can enter into transactions to purchase and sell shares, bonds, debentures, etc. Further, it performs an important role of enabling corporates, entrepreneurs to raise resources for their companies and business ventures through public issues. Transfer of resources from those having idle resources, investors, to others who have a need for them, corporates, is most efficiently achieved through the securities market. Stated formally, securities markets provide channels for reallocation of savings to investments and entrepreneurship. Savings are linked to investments by a variety of intermediaries, through a range of financial products, called securities market.